Hey everyone, and welcome back to Just Start, the podcast where we cut through the noise and get straight to the real actionable advice for founders in the trenches. I'm your host, Resh, from the Boom platform. Our mission every single episode is to bridge that massive gap between I have a crazy Web3 idea and I have users who actually love my product. We're here to talk about the grind, the sleepless nights, and the action, tactical moves that turn a vision into a reality. Today, we have another founder who has lived that journey. I'm thrilled to introduce Matt O'Connor, also known to many as Matty Tokenomics, the founder of Legion.cc, a project that is merit-based crypto fundraising platform that's bringing compliance and fair access to an industry known for insider dealing. We're going to get into his story to unpack the universal truths of starting something from nothing. How do you find the courage to begin? How do you get that first crucial believers? And how do you survive the chaos of building from ground zero? So, Matty, welcome to Just Start. Now, before we dive into your story, can you please share with our listeners one piece of practical advice they can use today? If someone's sitting on an idea but paralyzed by uncertainty, what's the smallest possible first step they should take this week?
That's a good question. And it's the right way to think about these things, right? Like a lot of people, especially if you're non-technical, you think I have to build my whole product and my whole app before I can kind of learn anything. And that's almost always not the case. You can go and talk to one stranger, right? One customer, one friend of a friend, somebody you don't know directly. Talk to one person about your product, about your idea, and understand their reception to it, right? Ideally, it's best somebody that you think would be a customer or a user, right? And really get their honest opinion. If it's someone you personally know, even if they mean well, they're going to give you a biased opinion. So you really want someone that is at least one degree removed from you. And then there's also someone, they don't have to be an expert per se, but they should be someone relevant. Like you wouldn't go ask a college student about, I don't know, buying a house or something, right? Somebody who's never done that before, right? So find someone who's knowledgeable about your topic, but not immediately connected to you, and just pick their brain and see what they make of your idea. And oftentimes your very first idea is not the right one. So don't get married to it. Just listen to the honest feedback and try to refine from there.
I think the one part that it's so crucial what you just shared there, but my experience has been that people always worry they won't come up with another good idea. So they get married to that first idea.
Yep.
And they try as much as possible to fit the feedback they get into the idea compared to the other way around to fit
Yeah.
the idea into the feedback they get. So now how would you advise or your journey when you were exploring ideas? How did you not stay married to the idea?
Yeah, it's a good question. I mean, for our case in Legion's example, my co-founder and I, we literally chatted with over 100 different, because our at the end of the day, our business is a two-sided business, right? We have what we call supply. We have projects coming to Legions, founders of other businesses coming to Legion to kind of issue and launch their token. And we have demand, retail users, people coming to buy tokens, right? It's an on-chain fundraising platform. And so we spoke to, because the first thing you need to do is solve problems for founders, for them to be projects for people to buy. So we spoke to like over 100 different projects, over 100 different founders about their problems first before getting into product, before writing a single line of code. We understood, okay, everyone seems to, we look for the common threads, right? Okay, everyone seems to be saying they want to be able to do public token sales, but they almost all say the biggest blocker is regulatory risk, right? And so it's not the most fancy thing. It's not the easiest thing. It's not the most cost efficient thing. It's not the most exciting thing. But first and foremost, it was very clear in order to improve on any other features for anyone to ever use us to begin with, we have to first and foremost solve the regulatory risk so that founders can come on our platform and trust that the funds they raise are not going to be frozen, or, they're not going to get a knock on the door from the police or go to jail or anything nasty like that. So really it's about keeping an open mind, having lots and lots of conversations, drawing the connections, seeing the trend, and then just like, you've got to build what the market wants. Like you're not always right. If you think you're right, though, you can usually design small tests and hypotheses to test test what you think without going and building your whole app, right? Before you build the whole thing, you could mock up a fake app in Figma or, any kind of wireframe and just get people to interact with it and see what they think, right? So there's a million ways to gather data without investing your time and money. And that's really your objective. Gather as much data as you can to enable to validate that first and foremost, this is a problem that people have, and that it's a big enough and urgent enough problem that they're willing to pay for a solution to that problem.
So, Mary, this what you just showed is interesting, but I want to dive back in terms of your background is really interesting,
Mm.
where you came from, and I found out. I mean, I knew you from working with other projects, and when I found out your background that you came from Bridgewater, I was like, "What? This guy must be a really knowledgeable person," and he left a cushy job to come to Web3. Now, for our audience, can you share in terms of your background, your education, how you got into Bridgewater, and why did you leave such a prestige organization to come into chaos?
Yeah. Well, I don't know if there's anything as a any such thing as a cushy job at Bridgewater, but for those who know, right, Bridgewater is the largest hedge fund in the world by assets under management. It's Ray Dalio's hedge fund, right? The guy who wrote the principles. For those who may not know its name, I studied in undergrad. I studied finance, and so had a strong quantitative, statistical, finance background. And after school, started working in finance, and pretty quickly found myself on the algorithmic trading desk at Bridgewater. Was there for about 3 years. I think the numbers on this probably change, but something like, Bridgewater's known, if you know anything about Ray Dalio and the principles and all his writing, for its, very extreme work culture. I think something like 30% of new hires last less than 3 months or less than 6 months, something like that. So it's a pretty extreme place. But yeah, I was there for years. And for me, it was an enjoyable experience. You learn so much about yourself, working with other people, working on really challenging problems. I was basically, my day to day was working with an algorithm that was, trading futures, equities, options, you name it, and then doing data science kind of after the fact on what happened and how can we kind of optimize, to make even more money, or pay even less as we trade, right? To put on our exposures in better ways. So we didn't really call it that, but it was more or less like a data scientist, algorithmic engineer is more the term we used, investment engineer role, and was there for 3 years. Long story short, fell in love with the more technical side of things, the data science and machine learning aspect, and kind of looked around myself. And there were people who were at Bridgewater for a year near me, and then there were people who were at Bridgewater for 10 years. And then there was me in the middle, and I was like, okay, if I don't leave now, I'm going to, turn into those people that have been here for 10 years. And that wasn't the choice I wanted to do. So made the change.
Right. So, can you tell me the exact conversation where you decide to leave the security of Bridgewater and building, well, before you moved into Web3, Stacks, Ethereum, what finally pushed you over that edge there? What made you go like, I have to do it now?
It's a good question. I mean, I think it was more just realizing that I would not have the time, to execute on my own type of vision, because Bridgewater, it's a full-time role. It's mentally taxing. You're there 12 to 16 hours a day. The average is well above 14s. It's a very taxing role, much like any kind of, private equity or investment banking type of role. So for me, it was like, if I want to, pursue building my own concepts and kind of like, be an entrepreneur in any capacity, I've got to get out of here. This is not the kind of job where you can do a side hustle. There are those jobs, but that was not one of them.
So, okay, so you decided to move into Web3. You, please correct my timeline if I'm wrong here. All right.
No worries.
You explored into Ethereum first, or do you come straight into Stacks to help founders on why specifically tokenomics?
Yeah. Yeah. So let me give you the brief background. So left Bridgewater, as I mentioned, fell in love with the data science, the machine learning aspects. And so I actually spent this was back in like 2015, right? So 10 years ago at this point, which is crazy. Spent a few years working in Web 2 startups. So worked as a machine learning engineer, worked as a data scientist, started a profitable machine learning company, raised funds actually, and was running a Web 2 startup for a while. We did things like we would basically plug into Shopify stores, model out all their data. We increased the revenue per email sent that stores were generating 30x. So not 30%, but
Wow.
30 times higher. Yeah. So that was a really rewarding experience. And so during that process, I had customers, co-founders, employees, investors, all depending on me. So I was really focused on my Web 2 role professionally, but very much was starting to get interested in crypto as a hobby. And so I think you can actually go back and find it. The first article I ever wrote on Bitcoin dates back to, I think, 2016 on a traditional finance website blog called Seeking Alpha. And then I really started getting into crypto in the 2017 original ICO craze, right? Participated myself in a number of ICOs. Not all of them did well, of course, but that was kind of when I started to see, there's something here, like there's a change to the financial markets around the corner. This is interesting to me. But it wasn't until maybe 2021 that I made the shift full time into crypto, again, having those obligations to kind of my Web2 businesses. And so was able to exit from that responsibility, had some bandwidth. And so started dabbling, wasn't really sure what I was going to do next, but knew I wanted to take a look at blockchain and Web3. And so started hanging out in the Discord servers. Now, one of the projects I most was interested in from those 2017 days was Stacks, because one, no one at the time at least was talking about building on Bitcoin, right? They were just talking about replacing Bitcoin. I thought Stacks was a very unique vision. And two, they also had a very unique go-to-market approach with doing a public ICO that was regulated by the SEC, right? Which maybe not a lot of people know, but they did one of the only, if not the only, SEC qualified ICOs. And so those are both very interesting things. I was a Stacks bag holder, or still am a Stacks bag holder. Started to get learning more about the ecosystem, and in that process, just naturally kind of ended up working for the Stacks Foundation. They needed someone to kind of do modeling out of simulations of their consensus mechanism and look at, if we make these technical changes, what are the security implications for the chain? What are the economic and kind of tokenomic and inflation implications? And with my background of, simulations, modeling, data science, combined with traditional finance, that pretty naturally fit. And so worked for the Stacks Foundation, worked for Status, the S&T token, one of the first projects to ever ICO on Ethereum, in a similar role, leading a small team focused around crypto economics or tokenomics. And then, of course, wrote an open source book called Tokenomics for Builders that was really well received, reviewed by people like Keone, the founder of Monad, Chris Berninski, the founder and investor at Placeholder VC, Ilmoy, the co-founder of Tensor, one of the biggest NFT markets on Solana, et cetera. So just built up a name for myself really in that mechanism and token design space. Worked for, angel invested or advised over 30 projects from pre-token to token, and so kind of have just seen everything, including all the ugliness about how the sausage gets made when it comes to launching a token.
That is a very interesting background. We spoke briefly when you say like, hey, I'm planning to launch a startup. And I was like, cool. And I think back then I was exploring in terms of the various things that are taking place in the ecosystem as well on Bitcoin.
Mm-hmm.
And I always wondered, when you started Legion, what was the biggest moment when you say like, I have no idea what I'm doing in those first few weeks? And how did you push through the doubt, especially when you were validating your idea, even though you had already built the name, and pushing through that doubt, if there was any doubt to start with?
Well, yeah, I mean, of course, I think as a founder, you always have both emotions all the time, right? You have crippling doubt, you have runaway kind of success or pride or ego, whatever you want to call it, right? Optimism, and you have both feelings every hour, if not every day, right? It's a very volatile journey, as I'm sure you know as well. So I think for me, it was about I don't know, the first moment maybe was one of the first things you have to do after you do your market research and your validation, right? Is raise at least some funds to kind of, there's only so much you can bootstrap out, right? Even if you are technical, like my co-founder and I both technical in some capacity, though definitely at least for myself, not the best developer in the world. But there's only so much you can do. You need some funds to bootstrap out. So we were chatting with people, and yeah, I mean, I think most founders, maybe not every founder, but most founder can relate to how much it sucks to fundraise, right? You're constantly getting rejected. You're getting rejected for all different sorts of reasons. So there's not even like clear patterns you can pick up on to improve. A lot of times people just ghost you. They don't even reply. So it's a messy process. And I think that's inevitably where a lot of founders first doubt themselves. But we persisted. We were very fortunate to find investors that believed in us, believed in the mission, and we, crafted our story well and refined our approach. Ended up raising back in the day about $2 million. And then we most recently just announced a raise of about $5 million. So in total, we raised about 7. But yeah, that first 2 million was incredibly difficult to raise, as I think it always is for any founder who hasn't had a big exit in the industry.
So, Mehdi, speaking of validation specificity,
Yeah.
you built a name already in the industry. Now, before like a writing code, you spoke to a lot of individuals. You identified there was a problem that requires real solving, but you too struggled in getting your idea validated in terms of funding perspective. Now, when you spoke to these individuals, what were the questions you were asking them to get more answers to fortify your business case or your offering?
When we were doing the market research to understand their problems, I mean, we had a hypothesis that, all else equal, doing a token sale is better than an airdrop. And so we were kind of trying to test, like, I think if you just go to people and you ask them kind of open-ended questions, like, what problems do you have? You're not going to get great answers, right? I think you need to ask people opinionated questions, like go to them and say, the selling tokens are better than airdrops. Do you agree or disagree? Right. And you're going to get an emotional response and some justification. And like, whether you like it or not, people make decisions based on emotion and then justify it with reasons, right? And so you want to kind of ask questions that elicit that emotional response. And so I think we approached it kind of that opinionated framework of trying to understand, do people agree with this? If they disagree, why? If they do agree, then why aren't they doing token sales, right? And so that's how we started to get into, like, okay, people do seem to agree that a token sale is better, and they're like really upset that they can't do token sales, right? That emotion coming out, right? And that's really good to see when you're validating a problem. Like if people have that problem so much that they get frustrated by it, that's a great sign you're on the right track. And so then it's just a matter of digging into, okay, you want this thing, but you're not able to get it. Why is that? What is your biggest fear? What's the biggest blocker to you getting that? It's regulatory risk. Okay, imagine we could snap our fingers and you could sell tokens to anyone in the world with no regulatory implication or risk at all, right? Would that work? And then they think about it and they say, yes, but, right? And they say, yes, but when I work with an angel investor or a VC investor, I know who I'm working with. If I sold tokens to a bunch of anonymous addresses, I don't know if these people are even people. They could be bots, they could be Sybils, or people I want to work with. And so then we get to the next layer of what ended up being the reputation system for Legion. But basically, you got to go about it, that approach, opinionated questions, and kind of find what people are angry or frustrated about, and then dig into the why and what's creating that frustration. And that's a great problem to solve.
When you identified the problem, how many individuals do you actually interview from both sides, the demand and supply side?
So the demand side was less about one-to-one interviews. I mean, I think it's just not totally scalable, and like we could already see that there was demand, like whether it's these community groups or community VCs, or like it was more or less clear to us that if you were to offer people, hey, instead of waiting to get dumped on by VCs, you could buy into token rounds, like there's going to be an audience for that. So it was more about validating the supply side for us. But some marketplaces, like Airbnb is the classic example, right? They had to validate both sides of the market. Like, would you stay in a random stranger's house and would you host a random stranger? So I think you just have to line up interviews, right? And like design experiments and test and make it as easy as possible for people to kind of just give it a try, right? Like in Airbnb's case, of course, they famously went and like took professional photographs for original hosts so that they made it as easy as possible for the hosts so that they're maximizing the chances that somebody at least takes takes a trial on it. And so for us, it was like we were relatively sure people wanted to buy the tokens, and now it's just understanding the supply side's concerns and making a product that's good enough where they're willing to go with us, even though they have airdrops and other options out there.
So, what did you? The reason I'm asking the idea of how many people you interviewed, because people always assume I asked 5 people, I have idea validation,
Yep.
and when we did the interview, we had to go like 50 individuals just to get a proper understanding of our different backgrounds. So I just want to get your perspective.
Ah, I mean,
What's
I
the
think
good amount?
yeah, I mean, I think it differs based on the type of business you're building, right? If you're building like an enterprise B2B sales business, like sure, 3 to 5 conversations might be enough, right? Because one customer is going to be worth like a $10 million contract to you. So sure, that makes sense. But for most people, you're probably not building, that type of product, especially in Web3. So I would say you need to speak to at least 30 different people, right? Like get some kind of statistical significance to it. 50, 100, even better. And so for us, it was, these, there's a lot of founders out there, a lot of token projects. And so the more we could speak to, the better. I think if we had spoken to less than 10, if we had done that, speak to 5 people, like we would have roughly been on the same track, but there's no way we would have, understood more of the nuances. And you also should be kind of refining your pitch, right? Refining your wireframes, refining what you're talking to people. So the first 10 conversations let us dig into, okay, a regulatory risk is the problem. The next 10 conversations, we could show people that, okay, if regulatory risk was solved, what's the next layer of the problem? So it's not literally the same conversation each time, right? It's you're building on your knowledge and progressing. So yeah, 30 to 50, I would say, is ideal as a minimum. 100 plus, even better. But again, there are some rare exceptions, like an enterprise, B2B type of business, you can do fewer.
Now, fast forward, this part, I think everybody goes through brutality, to be honest.
Yep.
How did you get people to take a bet on Legion and be your
Yeah.
first paying customer?
So at
I mean,
first,
I'm afraid to always ask for money. I always say, I'll offer for free. If you like me,
yep.
refer me and I'll charge then.
Yep.
But how did you go straight from
Well,
what you developed and payment?
I think it depends on your business model. I mean, in a lot of cases, what you just described makes total sense, right? Like you have a free trial. I think you first have to figure out a business model. And for our case, we help teams raise funds. The business model that made the most sense was take a percentage of what we're helping teams raise, right? So for instance, we charge like 5% of what teams raise, half in stables, half in tokens they sell. Some exceptions to that, for regulatory reasons, but by and large, that's our model. And so we needed to find someone, right, who is willing to pay that. Didn't like a free trial is not really possible in this circumstance. And so the first project we launched was with Pulse. X is the founder. So shout out to him. It's a wearable device, right, for your health, building on integrations with both Solana and Monad. So I'm excited about them. They just started shipping devices actually, but yeah, they were the first sale. They raised pretty small amount of money, right, which was more a function of Legion than the project, because they've gone on to raise much more at higher valuations. But they raised about 130-ish thousand. Legion was our first sale, and so we made like $5,000 after having built this giant app and spent a bunch of time and money on it. But that was the first customer, and it was really just a function of like finding someone who believed in us and minimizing the risk for them, and also of course in our context, like selling them on the perks of like being first and like getting additional attention, right? So just leaning into literally anything and everything you can do to get that first paying customer. And for us, it made sense for them to be paying. Sometimes it might make sense for them to be even free, just so you get those testimonials and you get that social validation, right? That makes the next one so easy. Just like fundraising, where it's very, very, very difficult to get that first check. But once you have the first check, the others flow much easier, though still, not a challenge. I think the similar with paying customers, right? Especially in B2B side of things.
But how did you figure out that 5% charge?
Yeah, so that goes back to honing in on your business model, right? So there's all sorts of business models out there, subscription model, right? Tiered model, percentage. We explored a couple of them, but none of them really made sense more than charge as a percentage of the funds raised, because that aligns incentives, and then do a split in both stable coins, because we obviously have fees that we need to pay for in stables or in fiat, and a split in the project's tokens, so they get a balance of kind of paying in stables and paying in their tokens. And this aligns incentives as well with what's nice is it aligns incentives for our users, because all else equal, us negotiating a lower valuation is better for us on the token portion and better for users. And it aligns our incentives with the projects, right? Because all else equal, the better the project performs, the better their token does, the more those tokens we collect as revenue are worth. So it was about where can we find the most incentive alignment, and where can we kind of price that is competitive, but still, when you do all the projections and all the revenue math, right, allows us to be profitable.
Once you identify that, the one element I've not asked you yet is
Mm.
the pushback.
Yep.
Now, I know based on working with projects that have launched tokens, everybody wants airdrops. Oh, there's no airdrops, it's a scam token. They're just
Yep.
looking to milk the community.
Yep.
And then from an investor perspective, they want liquidity to exit for what they're putting in, a certain amount of trading activity to be there. What pushback did you get for building a merit-based access in an industry that's rife to inside trading?
Yeah, it's a great question. I mean, so our model, for those not aware, works pretty differently, right? So we are a platform for public token sales, a platform for on-chain fundraising. But unlike most platforms out there, our sales are not purely first come, first serve, right? You as a user can kind of connect additional accounts. You have a reputation score, you have achievements. And so projects can kind of select the types of users that they want to have higher max allocation, for instance, or a discount or whitelist, right? A project can literally, if they want, go one by one and hand select who they want to be their supporters based on all these attributes, based on data about them on chain, based on their developer activity, based on their social activity, et cetera. And so, we kind of, even though it wasn't called InfoFi, we kind of predated all this kind of, InfoFi buzz that we've seen, play out over the last 6 months, a year. And so, yeah, I mean, we still get kind of pushback sometimes with people saying, well, how is that fair? Why can't I just, click fast and get as treated the same as other people? And like, fair is a loaded term, right? It doesn't, in another lens, it doesn't make any sense that a user who's new, that's never added any value to the ecosystem, never contributed code to the project, never tweeted about the project, never used the project, could arbitrarily get the same exact investment terms as someone who's been supporting the project for a very long time, right? That's not fair to the people who've been putting in the time and effort, right? It's not fair to real users that someone can just spin up a Sybil or a bot that clicks really quick or pays high gas and can win allocation better or faster than you as a human can get it, right? And so we think it's fair in terms of equal access to apply for allocation, but not equal outcome, right? Equal outcome, socialism, great. If you're for that, be my guest, knock yourself out with it. But I think most people in crypto, agree, lean a bit libertarian, right? Like equal access, equal opportunity, not equal outcome. So anyone can apply to the sale, anyone can hustle, anyone can contribute code, anyone can provide funds, right? Anyone can build up their reputation over time and win allocation. But that's not the same as saying everyone is going to get guaranteed, the same allocation in a high demand sale, right? So it's all about merit based. It's all about equal opportunity. And we still have some people who, don't love that model, don't get it. But I will say most users really enjoy that model. And most founders, or all founders really we've worked with, love that the most about Legion, that they're getting their token into the hands of real supporters, real people adding value, not just bots, fake accounts, symbols, etc.
When it comes to marketing, then, ma- whether this is a perception or reality, people also assume there's an 18-month window of a crypto bull market. You got to rush as much as possible, launch your token, make sure there's momentum behind your project, and you survive the bear market, which is about 2.5, 3 years. How did you market, which you're currently also doing now, do things the hard way and don't think about the bull or bear market environment?
I think the best founders realize that you can't really time the market too much, and like you need to launch when's best for your product, not just consider, market timing, right? If you try to time the market perfectly, you're never going to get it right. And so we try to work with absolute top tier projects, funded by the best VCs in the space, by the Multicoins, the Dragonflies, the Delphis, right? And so that type of founder generally understands that, the best time to launch is when the product is ready, not necessarily when the market is at a peak. And so it is still a sell to some teams, but look, you've got to get out there when you're ready. I've seen a lot of teams, wait around for the perfect time to launch, and then the perfect time to launch passes by, and then they're in an even worse situation, right? So for us, it's just about working with teams that are ready to launch and maximizing their launch to the best of what they can achieve.
You raised total of 7 million.
Yep.
How did you create a valuation for the product when there was nothing to compete? I don't think there's any, besides Legion right now, I've never heard about merit-based crypto fundraising. I mean, I have pumped up fund and all that,
Sure.
but I've never heard of a platform like yours. So how
Yeah.
did you, what's the comp, first of all, to raise 2 million at what valuation, and then 5 million at what valuation?
Yeah. So, I mean, it gets back to just the story you tell, right? I was tweeting about this the other day, kind of tongue in cheek, because I have, an average day for me, I'll have 12 to 20, calls that I'm on all day long, potential employees, VCs, projects we want to work with, vendors that we might use, partners, right? Generally catching up with other people, podcasts, all sorts of stuff, right? So I think founders at the end of the day, whether it's when you're first starting out and you're fundraising, or once you've started to scale and you have employees and you have partners and you have customers, is all about storytelling, right? It's all about painting a narrative, making that narrative believable, inspiring people, giving them confidence that you can achieve that narrative and execute that narrative. And so, to go back to your question, like fundraising is very much storytelling and and as a narrative. And so when we raised that 2 million, we were fortunate to have good supporters. We were fortunate to be incubated by Delphi Labs, which helped a lot, of course. Delphi Labs being the incubator arm of Delphi Ventures, Delphi Digital. But then it was still, we had to convince people like, actually, even though you think token distribution is fixed, no one likes this current points meta. Founders hate it. People are getting sick of it. And legacy, launchpad solutions don't actually fix the core problem, right? If you go to a player like CoinList and CoinList says, "Oh, great, 5,000 of our users bought your token." Well, who were they, right? Like, are they one guy in Russia controlling 500 accounts? Are they people I actually want to own my token, right? And so you're starting to see players try to catch up to us and bring in merit based. But for us, it was telling that story that, hey, you think that token distribution is a solved problem because the industry's been around for 15 years, and we've done a wave of ICOs, we've done a wave of airdrops, we've done a wave of exchange launch pads, but actually we still haven't fixed the core problem that an angel or a VC round fixes, of getting the tokens into the hands of the right value add investors, right? Finding the right capital to raise from, not just any capital. And so it was really a storytelling exercise of justifying to people, look, this is a problem. Here's the data that shows that it's a problem. Here's the testimonials. Here's why we're confident it's a problem. Here's if you agree that it's a problem, here's kind of the market size and here's why we're the right team to execute on that. And if you can still tell that story in a convincing way, then it just makes logical sense of, okay, I can see how that plays out. If it plays out, I'll assign a 30% chance or 10% chance that plays out. If it plays out, it's you capture this much of the market, and then a 10% chance times that is this valuation. Okay, I'd be willing to pay that valuation, right? Like, obviously, it's not going to work exactly that way. There's comps and all sorts of stuff, but that's effectively what your goal as a founder is to do: is to tell a story that paints a vision of why you are the right team to fix a real problem that real customers will pay for to solve, and what the vision of the future will look like when you do so. And if you can tell that story, you can fundraise.
So I think hearing you speak on this makes sense on a wide level.
Mm.
If I were to ask Mary, I understand the concept. What you're sharing, everything makes a lot of sense. The storytelling. But if a founder right now is asking, what
Yep.
was your storytelling? I
Yep.
mean, you just shared a part of it, but I still don't get the juice out of it per se.
Mm. Yep.
The problem I saw, like what you just shared, yeah, airdrops is a problem, but I'm still trying to figure out, but was a problem token dumping? Because a token dumping, what's defined as token dumping in the next 6 months, 3 months, and what's considered as a value holder or value capital raise? So how did you do that storytelling?
Yeah, I mean, so all those are subjective, right? It all goes back to how you choose to define it and tell the story. But for us, it was saying, look, you as a founder want to build a community, right? You want people that are there supporting you. You want the equivalent of a degen Spartan, right? Or like Chainlink God, right? You want these like people are going to go above and beyond for you, create content for you, onboard other users, be super passionate about you. You want your cult, right? You want your cult following. Airdrops, as all the data shows, do not create a cult following, right? Time and time again, 99%, if not more, of people dump the token immediately. They don't convert into token holders. They don't convert into product users. And so how do we get back to forming this cult for your product? ICOs did form a lot of these cults that we know today. And you can attribute to all different reasons, but there's a different psychological basis of buying into something versus getting it for free, right? And so that was forming the basis of some of our argument. Really, it was an argument that founders have a problem of needing an organic community and lacking the current tool set to build an organic community because they could not do a sale because of regulatory risk, and they could not reach the right people even if they were to do a sale. So that was kind of the story we were telling, right? Solves that problem for founders, helping them build their cult community. And of course, there's some price they're going to be willing to pay for that because they're going to have a higher market cap, all else equal, if they have, that community.
Thanks for giving that breakdown.
No
I
worries.
didn't appreciate from that angle that you just shared there. Getting the first 100 users or 1,000 users who become your army per se.
Exactly.
It's
That was
crucial.
literally like, I don't know if you saw the deck, but that was literally like one of our slides, right? It was like,
Oh, is it?
your first 10 employees define your company culture, right? Your first 100 or 1,000 token holders define your project culture. So, yeah, it was exactly the theme we were on.
All right. So bang on there. So now, what's your most expensive mistake from Legion's first year? And if somebody came to you and said, Maddie, I want to build something, and
Yep.
what would you advise them? How would you help them avoid that mistake?
That's a great question. We made a bunch of mistakes, some more expensive than others. I think, the ones you always hear from founders are like, we hired the wrong person and we didn't fire them quickly enough, right? Which I think is a very expensive mistake. We made that same mistake, but because that's pretty generic, I want to try and think of a more specific one.
Sorry, Maddie, I've heard that a lot. I mean, I heard Paul
Yeah.
Graham say the same thing, hire slow, fire fast. I've
Yep.
heard a lot of people say that as well. But as a startup, you also want to move fast. So I think that is inevitably going to be a challenge on that front itself.
It's
Because,
absolutely a tension, yes. But the key point is you want to move fast in the right direction, right? If you're moving fast in the wrong direction or even in an orthogonal direction, you are screwed, right? You're not actually making progress along what you want to be making progress along. And you're burning up your precious resource of treasury, right? You're burning up your burn rate, your cash. So I think the way to think about runway, like the way a lot of people think about runway as an amount of money, really you should think about your runway as an amount of time you have to find product market fit, right? So you have $1 million, you're paying $100,000 in expenses a month. You have 10 months to find product market fit, right? Is the way you would think about that. And so if you hire the wrong person for the role and they're taking your company in a wrong direction, that's all they're doing is reducing that 10 months you have to find product market fit, right? So I think you really, in the same way that you need to be very, very, very intentional about, are we solving the right problem? Are we working on the right thing? You need to be the same way with your employees. Are they the right person for what I need? And if they're not the right person, even if they're moving quickly, that's not necessarily a benefit, right? And so our case, like we had a very early employee who, we kind of fell into that trap you just talked about. Like we wanted to move quickly, we wanted to push out code, we needed to start getting things, in place. And it's tough to hire when you're a fresh startup that no one really knows if you're going to be around. You don't really have a lot of like reputation. No one really respects you. And so it's hard to hire. It's a lot easier to hire good talent right after you've raised a big VC round, right? Or when you're famous. So not that we're that yet, but hopefully one day. But we hired the wrong person. Then we kind of stuck with them longer than we really knew we should have because we were like, well, we don't have anyone better at the moment and we need to keep moving ahead. And I think in the long run, it would have actually been better to make the tough decision earlier and find someone that would be the right person, because they made some security blunders that we needed to go back and fix. They like all sorts of suboptimal implementations in the architecture that we need to go back and retool after we had already built systems dependent on it. So a bunch of technical debt, a bunch of just ugly stuff, a bunch of penetration testing that revealed issues that luckily we fixed, before they became issues. Yeah, I think you need to make sure that you hire slowly to find the right people and fire quick. Yeah.
so I just want to pull on that thread first before we move on to the same question,
Sure.
but from a different angle. Now, I 100% understand exactly what you mean. Like, we need to move fast. We don't have the resource to hire somebody expensive. At the same time, if we fire somebody right now, we could potentially stall right here
Yep.
for a period of time, and then
Yep.
we lose momentum.
Yep.
Now, especially being a founder, I've always, or your co-founder as well, I've always been told that you need to hire people smarter than you to be able to do the job because of what you cannot do,
Yep.
especially in a startup.
Yep.
Now, what you just shared there was you found out the issues later on. But in the moment, when you're depending on somebody to be a subject matter expert, and you are not potentially, isn't this part of the game that you will eventually have to go back and clear up the mess? So is it hire slow, fire fast, or is it part of the tuition fees per se.
I mean, I think it's part of it, but I think in our case, we kind of knew that he was making, sloppy things. And even if you don't see the full, even if you don't see the full picture, right? There's generally like you're seeing the tip of the iceberg. Right? You don't need to be like a database expert to know that like certain things just seem wrong or are not living up to, widely, typical benchmarks, or maybe that's not the best example, but you don't need to be an expert to fully understand, everything about a topic, but to smell smoke, right? And so if you smell smoke, you can pull in an expert, you can pull in a friend, right? Get their opinion, call in a favor with someone who is an expert. But I think it all goes back to prioritization, as everything does as a founder, right? You don't have any boss there telling you this is the right thing to work on, this is what you should prioritize. Being a founder comes back to you prioritizing working on the right things. And so what I really think I mean here is, let's say you have an employee, they're the only employee you have, as a developer, for instance. You literally need someone in order to develop this thing, but that's not the right person. Yes, if you fire them today, you're not going to advance, but you could prioritize, instead of the 18 million other things you can be doing that also add value to the business, you could be prioritizing doing everything you can to find someone ready to replace that developer at a moment's notice, right? And so you can prioritize finding a good replacement and then fire them really quickly, rather than making the excuse like, oh, it's okay, like it's not my biggest issue, I have other things to work on. Next thing you know, 6 months have passed and you have a product that's okay instead of great, right? That's kind of what I'm talking about.
Right. Okay. So now you were sharing that, okay, that might not be the best example. If somebody came to you right now again, what's the most expensive mistake besides hiring?
Yeah. I mean, I think this is we are a regulated business, so I don't know if this applies to everybody, but there's a kernel of it that applies to everyone. Is as much as everyone hates lawyers and hates paying lawyer bills, you really need to be careful about working with budget lawyers. Saving 20, 30%, 50% even on a legal bill versus working with someone who's more expensive but much more qualified, has worked with tier one projects. I mean, it can be it can come back to bite you in the butt. You can easily spend X or more of the price difference that you saved later in fixing things and legal bills and risks, all that sort of stuff. And so for us, yeah, we've had to learn that lesson pretty painfully. Like, regulatory processes have sometimes taken way longer than they should have, which had business implications, paying fees, delaying our round, for instance. So yeah, I think be very careful of who you work with as lawyers, and do not just go for the cheaper option. All lawyers are definitely not created equal.
Can still vouch for that. uh, one point I want to check before we go to the last question is that, as you advise projects on their tokenomics in terms of how to launch and all,
Yeah.
which different platforms have you found to be most effective for people to voice out their brand? Reddit, Discord, Telegram? How do you advise projects in terms of, this is where you need to go? I mean, we always hear that people say, you want to find problems, go to the niches. That's where the riches are. That's where you go and spread your product information. But where you being in the trenches, where have you seen from a marketing perspective to be the best place to do this?
It's a really good question. And to be honest, it's getting tougher every day because of AI slop, right? Like, you have more bots, you have more fake accounts, you have, as soon as you launch a project and even hint at ever having a token or a points program, you just get inundated with a bunch of fake accounts that are also getting harder and harder to distinguish from real accounts, right? Because AI is getting more sophisticated and cheaper. And so I think it's a harder problem than ever to answer. I think it makes it, at the same time, even more important to make sure that you are engaging with a kind of more organic community. And so I think anything that's just thinking from more of like a first principles lens, I think anything that is more interactive, where you can get a better sense, a closer relationship with people, a better sense of if they're real or not, a better sense of how engaged they're not, would probably be better for forming that initial community, right? And so there's probably going to be different tools that are best at different stages. But if you're literally starting at zero, I would look more like a Discord, where you can have a conversation with people. You can build up more of a relationship more easily than you can at X, which is a bit more, of course, you can reply, but a bit more like broadcasting to people, right? So I would look at something like a Telegram or a Discord maybe to start with. And then when you have a little bit of a following, obviously you want to be growing your X anyway. But we at Legion actually partnered with Cookie DAO, which does similar InfoFi type of stuff to other platforms in terms of quantifying kind of the value that you're tweeting about projects. But we combined and teamed up to do what we call C snaps campaigns, where you're capital snaps, where you're putting your money where your mouth is. And so, for instance, Almanac, which was a project that just did a raise on Legion, you could earn snaps by tweeting about the project, but you could multiply those tweets by depositing TVL, for instance, to Almanac. And so you were not just talking about it, which any bot can do. You were also literally putting your money where your mouth is, which not every bot can do because it's a fixed amount of capital that they can afford. So I think anything like that, where you can design in Sybil resistant mechanisms where people are, whether they're buying into the token or not, they're putting some kind of deposit down, your early TVL providers, whatever that is, right? Something that can distinguish fake people and people there just to farm you from people who are kind of mission aligned and willing to contribute their time, their creativity, their capital. Those are becoming more and more important. And so I think tools like Cookie and Legion, tools like Discord, tools like some of these like reputation systems that Legion also uses to kind of think like 10,000 followers is not the same thing as someone, or not necessarily better than someone who has 300 followers, but one of them is Vitalik, for instance, right? So all about these quality of signal, things like people's Legion score, all factors into it. And so at Legion, we kind of do fun stuff of like, look at when we're hiring people, we look at kind of their Legion score, right? When we're having projects come, we look at the Legion score of the founders, right? So we use our own reputation system for kind of distinguishing signal from noise. And I would suggest communities do that in their own way, whatever that is, right? Find some reputation system that's hard to fake, that's hard to Sybil attack, and then use that as kind of the basis of you building up your community.
So I think we both seen this phenomena happen in the last 12 months, points.
Yeah.
And I think the entire ecosystem is point fatigue.
Yeah. Yeah.
Do you think that because points a lot of what you just shared there without a token,
Yeah.
with the promise of future rewards, is that something what you are alluding to, or this is something slightly more different, the approach you're talking about?
I think it's different from point. I mean, points can absolutely work well if well designed, but they can also be useless if they're just only rewarding bots and Sybils. And I think one of the biggest mistakes founders can make is launching a token too soon. And I think points are similar to that. One of the biggest mistakes you make is launching points program too soon, because as soon as you even talk about a points program, you get a ton of bots following you, entering your Discord, replying in your comments. And so you really it's more important than ever to first find, even if it's small, first find that small community that's passionate about your project, passionate about what you're working on. They're real people that can be kind of your evangelists, and then try to scale up. But if you go straight to points or tokens before you have an organic community, then you have no organic community kind of grow and accelerate. You just only have bots, and that's not going to work out in the long run.
Promise you this is the last question before the final question.
Okay, second to last question.
When is the right time to launch a token? Because that is always the question, right? People always launch a token for two reasons. Number one, to enrich themselves, whether we like it or not. That's why people do it.
Yep.
Secondly, that's the only mechanism they know of to reward early investors potentially with giving them some token allocation so they come in.
Yeah.
So when is the right time?
Yeah.
I know it's an open-ended question, but your experience for the last 15 years that you're seeing.
Yeah. So, I mean, a lot of founders, obviously, like we were talking about earlier, think the right time is when the market is good. But I think that's not necessary. It depends. I mean, if you're just trying to dump your token and get rich and, never build again, like, sure, maybe. But if you're legitimately here trying to build a business, trying to build a project, for the longer term, trying to actually do something instead of just get rich ripping people off, you have to look at data. Like, some of the best and most successful projects and tokens have launched in the middle of bear markets, right? Like, so I don't think you can actually, I don't think the data actually supports the hypothesis that the best time to launch is in a bull market. So really, it's not really about timing the market. It's about timing your product, right? When you have a product that has some product market fit, so you have users using you and you're retaining those users, right? They're not just using you to farm rewards. That's kind of the time to launch, right? And you want to try to maximize it on some hype and build up to it and have some announcements, right? And have demonstrate some traction and get people excited, because I think you want to maximize the rate of change of kind of the growth of your project rather than like the overall growth or overall amount. And so what do I mean by that? I mean, when people are kind of like talking about you a bunch and you've been growing a lot, even if you're still small but you've been growing fast, that's probably the best time to launch a token. So it's all about your own metrics, your product, your community. I wouldn't look at external factors. And then the last thing I'll say is I've seen projects that were like, we're going to run, a points program for 6 months and there's going to be 6 seasons. And so we're going to do that no matter what. And like halfway through that, the market is ripping. Like people are coming to the project every day. They've got a ton of mind share. Like everything is perfect to launch the token, but they said they stick with the plan of having 6 months point program, and then they end up regretting it later because inevitably, the market goes down by then. So really, you should not. Everything should be flexible. You don't want to write anything in stone. You want to do all the work and be ready to hit the go button on your token basically as soon as is best, right? So you want to line up your market makers, your exchanges, et cetera, in advance, and then have that flexibility about the exact timing. But I think that exact timing, again, comes down to your product first and foremost in your community. The market can help accelerate and amplify those things. But even in a bear market, when the whole market is crap, if your community is really passionate and you've been growing, a bunch in terms of TVL, in terms of mind share, in terms of followers, that's the right time to launch your token. Why wait another year once your growth has flatlined just because the market's better? Like now there's a million other projects that people are going to pay attention to instead of yours, right? So that's how I think about
Okay, that makes a lot of sense, and I'm glad I asked a question. Okay, here's the final question.
it. All right.
If a listener walked away from this conversation and did exactly 3 things to start their own venture, what should those 3 things be? And remember, these are individuals who have an idea, not a product yet, and they're
Yep.
just starting today.
Yep.
Just start. Yeah.
Yeah.
What would you
So
say?
I think it kind of goes back to what we were first talking about of go find not just one person, but you could start, of course, got to start with something. Go find people that are 1 degree removed from you. So they're not people you know directly, but they're people that you know directly can introduce you to and speak to them. Interview them about their domain, interview them about your product, get their feedback, show them wireframes, right? And take their feedback, incorporate it into what you're doing, and repeat the process, right? And repeat that process until you've spoken to at least 30 to 50 people, right? So that's one of the 3 things is have these conversations. The second thing is practice your storytelling. So you should have, a pitch deck and you're constantly refining this deck. Want to be, I mean, maybe it's a stylistic thing, but my personal style, what I like to do is kind of anticipate the objections, right? If you put yourself in the investor's shoes, probably the first thing you're going to think about is like, who even cares about like what? Well, first of all, what are they doing? But then why does anyone care about that? Like that sounds like a dumb idea, right? So kind of like anticipate objections and walk people through this story and then just practice that storytelling. Again, you can pitch to first connections away, but do not pitch to your immediate friends and family. It's going to be useless. So speak to a bunch of customers, practice your storytelling for your pitch. And the third is start to reach out to investors that you want on your cap table. It's going to be too early. They're not going to invest. Don't pitch them. You don't have a product. You don't have traction. You don't have anything yet, right? Unless you have previous successful exits, you're not going to raise on an idea alone. That's just the reality. But get on their radar, right? So get on their radar so they know who you are and you can send them updates. And 3 months, 6 months later, when you do have an MVP, when you do have a tiny amount of traction, you're not coming to them for the very first time and they're seeing, oh, this app, it only has 100 users. They're seeing this founder that was like, they reached out to me cold 3 months ago. I thought they were an idiot. But then they kept persisting. And then 2 months ago, they reached out and said, oh, they built this thing. 1 month ago, they said they've actually launched. And now they're reaching out. They said they already got 100 people using this stupid app. Like, what am I missing? There's got to be something here, right? Like, that's so different than just reaching out cold and saying, I've got 100 users. Can you raise money, right? So start to build those relationships. Don't pitch them. Don't hard sell them, but just get on their radar and identify who those investors are now. So do a bunch of market research from people that your friends and family can introduce you to, practice your storytelling, and get on the radar of investors that you want to be raising from, but don't pitch them yet.
Mary, as part of Just Start, I always try to write a small article accompanying the videos that we release. Is there a template of in terms of in reaching out investors? Hey, my name is X.
Yep.
I'm building Y. Would just like your feedback around. Do you have like a generic template? I would love to include that in
I don't
that
have a
write up.
generic template, to be honest. I think it's best if you as the founder, because you want to catch their attention, right? So you want
Yeah,
to do something unique to you, because investors get inundated with stuff, and so you want to. They might not even reply to you, right? They might just read the message and not reply to you. That's okay in this case. You just want to be consistent and follow up with them, and not get don't pester them, don't get blocked by them. Just reach out and say, hey. It could be everything from, hey, I saw you invested in, these 3 companies. I'm working in a similar space. Like, I'll keep you updated. Or, hey, I was in this hackathon. Like, just something to make you stand out that they can remember you by. And like, your goal isn't even that they're yet replying. Your goal is just they probably read the message, or they probably got the notification on their phone and at least read the first like half of the message, right? Like we all do. Even if they don't reply, they now know of you. And the next time you message, right, there's some recognition. Yeah.
Mary, I can't thank you enough. This has been, I'm not sure about how others will find it. I personally have learned a ton. I mean, I've always learned a ton speaking to you either way,
Awesome. Well, thank
but
you very much.
I truly, I'm very grateful you took your time to share your knowledge. I hope the listeners will too. And I hope there's a round 2 soon, once in the near future. I
Of
would
course.
love to follow that.
Of course. Yeah.
Again, Matty, thanks very much. If anybody would like to find you on your personal account on Legion, can you just drop your handle so that individuals can find you?
Yes, absolutely. So for Legion, the website is Legion.cc. Our Twitter handle is just that spelled out. So Legion.cc, Legion.cc. And then my personal Twitter is Matty, Matty, Matty Tokenomics. As we talked about, right? Known for token design, mechanism design. So if you can also find Legion via my personal, but come find those, send me a message, let's chat. And again, thank you for having me, Resh.
All right, buddy. That's it for a wrap.
Amazing.